Hello students. How are you? Nice to meet you again. Today we will continue Chapter 9, Absorption Costing and Marginal Costing Part 2. Week 13, let's go. Our learning objectives. Comparison between absorption costing and marginal costing. Advantages and disadvantages of absorption costing and marginal costing. Learning Objective 3. Comparison between absorption costing and marginal costing. The difference between absorption costing and marginal costing. Remember we had learned the difference computation of unit product cost and treatment of fixed manufacturing overhead costs in Part 1. Now we continue the difference about income statement. Absorption and marginal costing income statement under actual costing. Actual costing. The cost incurred are actual direct material, actual direct labor, and actual manufacturing overhead. Illustration for income statement under absorption costing with actual costing. Sales minus cost of goods sold equal gross profit. Then minus selling and administrative expenses equal to net profit. The external financial statement use the traditional income statement format with a focus on gross profit. Illustration for income statement marginal costing, which is contribution margin format. Sales minus all variable cost incurred. It's include variable cost of goods sold and variable selling and administration expenses. We will get contribution margin. Then minus all fixed cost. It's include fixed factory overhead and fixed selling and administration expenses to get net profit. The internal financial statements use the contribution margin income statement format with a focus on contribution margin. Absorption costing and marginal costing. Take a look at income statement for normal costing. Income statement under normal costing. It's include actual direct material, actual direct labor, and applied manufacturing overhead. Illustration income statement absorption costing for normal costing. For normal costing it is consider applied manufacturing overhead. If under applied manufacturing overhead debit to cost of goods account, and if over applied manufacturing overhead credit to cost of sold account. In absorption costing it's considered total variable and fixed manufacturing applied overhead for adjustment cost of goods sold. Continue income statement for absorption costing. Gross profit minus fixed and variable selling and administrative. And finally it will get net profit. Okay students, take a look at illustration income statement for marginal costing under normal costing. Sales minus variable cost of goods sold. An adjustment of cost goods sold should be made under normal costing. It's only consider applied variable manufacturing overhead. If under applied variable manufacturing overhead, debit to cost of goods sold account, or if over applied manufacturing overhead, credit to cost of goods sold account. Continue for income statement marginal costing. Contribution margin minus fixed cost for fixed manufacturing overhead and selling and administrative expenses, will get net profit. The total of under or over applied manufacturing overhead in the income statement of the year. For absorption costing. involving under or over applied fixed and variable manufacturing overhead. Because the computation of the per unit production cost include both fixed and variable cost. The total of under or over applied manufacturing overhead in the income statement of the year. For marginal costing, involving under or over applied variable manufacturing overhead because the computation of the per unit production cost include the variable cost only. How does operating income differ between marginal costing and absorption costing? For absorption costing, only partial of the fixed manufacturing overhead is expenses. These costs are recorded first as assets in the inventory accounts. Later, when the product is sold, the costs are transferred to the expense account cost of goods sold. For the unsold unit, part of the fixed overhead is absorbed by the ending inventory. For marginal costing, all of the fixed manufacturing overhead is expenses. Fixed manufacturing overhead is considered a period cost and is expensed in the period in which it is incurred, because these costs are incurred whether or not the company manufactures any goods. Hence, no portion of fixed manufacturing overhead cost is absorbed by the ending inventory. Let's see the effects the two methods have on calculating operating income. There are three different scenarios to consider. 1. When units produced equal units sold, operating income absorption costing equal marginal or variable costing. 2. When units produced are more than units sold, operating income absorption costing greater than marginal or variable costing. 3. When units produced is less than units sold, operating income absorption costing less than marginal or variable costing. Illustration: reconciliation of net profit using net profit absorption costing to get net profit marginal costing. Illustration: reconciliation of net profit using net profit marginal costing to get net profit absorption costing. Learning Objective 4. Advantages and disadvantages of absorption costing and marginal costing. Advantages and disadvantages of absorption costing and marginal costing from the aspect of 1. Decision making. 2. Performance evaluation. 3. Reporting. Absorption costing. Advantages. 1. Follow GAAP and is more suitable for external reporting purposes. 2. Includes fixed manufacturing overheads costs in valuation of product costs. Disadvantages. 1. Not suitable for management performance evaluation. 2. Calculation of fixed overhead based on estimation and can make the information regarding product cost not accurate. Marginal costing. Advantages. 1. Help management for planning, controlling and decision making. Differentiate cost between variable cost and fixed cost. The use of variable costing is acceptable only for internal use by management. 2. The purpose of fixed manufacturing costs is to have productive facilities available for use. 3. Affect sales changes on net profit easily to identify. It show changes in margin contribution. Disadvantages. 1. Limited to internal users only and reporting not follow GAAP. 2. Differentiate cost behavior between variable cost and fixed cost difficult and usually it based on estimation. That's all students. Please do your online quiz. Thank you. Bye.